Good afternoon, guys, or good morning, wherever you are in the world. I've got a really interesting guest for us today, Marc Walton, and he's actually chiming in from Portugal. He's got an interesting background. He's a 30-year home-based trader. He's also got a lot of interesting ideas in alternative investments. And he's a creative. He's a musician, and for a lot of things, we hail from similar. We came to the same areas, just through different routes. And so I'm really happy to have him on and talk about his journey, and add some value to the audience. So, Marc, welcome.
Thank you very much for having me. Thank you.
Yeah. And, kind of chronicle your journey. What almost led you to, now you're quite successful just trading from home. Obviously, none of this is advice. That's just, we're just talking to people that have done interesting things. So how did you get to where you are today?
Well, I was saying earlier, you and I kind of arrived at a similar point at a similar age, but we did it from completely different places. You obviously went on to higher education and studied for many years and a profession. I messed around at school, had a great time. I was captain of the football team and life was good. And I left, I had no idea what to do. So I went wandering around Europe for a few years with a guitar on my back, busking and wine picking and living on a beach and all sorts of things. And then when I got back to the UK, I started my first business when I was 21. And by the time I was 30, I was thinking I was nearly making it. And then a very expensive divorce and a custody battle to get my kids nearly bankrupted me. So I started again. And then I got to late 30s, built another business. These were all bricks and mortar businesses. And I just got to the point. I bought the little red sports car when I was 38, which my wife christened as the midlife crisis, and that wasn't enough. And I just got to the point and I thought, you know what? I don't want to do this anymore. I was sick of employing people and the hassle. I was sick of the weather. I was sick of the politics. And so we sold up, left with a suitcase each, and went to live on an island off the coast of Africa, which was different. And I went back to my hippie roots. I had hair still in them days. And I went back from earning six figures to singing and playing guitar in hotels and bars for a few years. So completely different angle. I mean, an important lesson to learn for anybody that's thinking of retiring early. Don't think that when you retire that you are going to spend less and you don't need as much, because what I found, I mean, I have kids in private school, so we had a lot of expenditure, but I thought I'd retired at 40. And we spent twice as much the first year we were there than we would envisage, because you've got all this free time. And we were living in the Canary Islands. It's very much a cafe society. So you'd be out for coffee on the morning and something to eat. And so I explored internet marketing very badly, built websites, average, and then stumbled on Forex early, I think 2002. And I'd never heard of it before. And in those days, it wasn't plastered all over YouTube. I don't even know if YouTube existed in 2002. Can you remember? I don't think it did.
No.
So there's none of the hype with it. And I paid $3,000 or $4,000 for a DVD course that would nowadays you could get on YouTube for free. And I thought, well, I'm a smart fella. This is not very complicated. I'm going to make a shed load of money. Off we go. And spent 2.5 years in the basement, lost 20 grand, spent another 10 on shiny toys and indicators and gurus, and thankfully found one of your countrymen, a gentleman called Rich Friesen, retired trader, to teach me. And within a year, I was trading for a fund and went on to trade for my own clients. And along the way, I'm very much into cyclical investing. So I made good money in the dot-com boom, and then foolishly gave most of it back because I was very new to investing at that stage in my 30s, and probably a bit arrogant with it, and certainly naive. And that was painful. But that stood me in good stead later on with crypto, because I got into crypto in 2020 and did extremely well out of crypto. We just caught the right cycle at the right time. And then in 2022, I got back into gold again. And at the moment, my portfolio is fine. Gold's just made all-time highs again today, and been able to leverage gold by trading mining stocks. So yeah, life's good. And I said to somebody the other day, I think if I'd stayed in the UK, I would either be dead by now or on my third heart attack. Whereas I've had a whale of a time, and my kids got to grow up in a beautiful part of the world, and yeah, life's good.
Yeah, it's so fascinating because I listen to a lot of like I don't know if you're familiar with like Raoul Pal, and he's
Yeah.
also from the UK, and he retired in Spain, but he's very similar mindset to you. So we'll dive into it, and one thing that struck me while you were talking is do you think these early experiences with like just traveling, because a lot of people would look at, like, for example, here in the States, they look at kind of wanderers, they, aimlessly, they kind of look down. But do you feel like being a musician and kind of traveling across and not having any ties made you a better entrepreneur and or these
Yeah, I think so.
experiences?
I mean, you learn self-sufficiency, and again, my thinking is different to a lot of people. When my youngest daughter finished university 10 years ago, and she got a good degree, and she was leaving, and having grown up in the Canary Islands and studying, she didn't want to live in England, and she said, "I really don't know what I want to do." So I said, "Right, here's some money. Go get on a plane and go see the world." And she's still traveling today, and she's 31 next week. So what I said to her is, look, if you get on the wheel, it's very difficult to get off the wheel, because as we all know, once you've got a mortgage or you're paying the rent and you're paying transport or a car loan and all the rest of it, they've got you. And as with me, I mean, for me at 38, 39, to sell a successful business, sell the house and disappear off, is not normal. But I did make a plan. I mean, we bought 10 houses, and 20 odd years ago, it was cheap and it was easy to get hold of money. And I said to somebody the other day, I had a credit rating then. Nowadays, I've got money, but I have no credit ratings. I've no debt. I don't use a credit card. And yeah, now if I wanted to borrow any money, I wouldn't be able to. But yeah, I said to my daughter, just go. It's a big, beautiful world. Go see it while you can. And she lived in Australia for 2 years, and she spent the last 10 years wandering around the world. And she makes money online. I taught her how to build websites. She's a very good photographer. And again, I think, you look at kids now, the pressure, peer pressure for kids to go to university, especially in the States, because I mean, you guys seem to be pre-programmed. As soon as a kid's born, we start saving for the university fees. But to me, if you don't, if you're passionate about something and you really want to, then do it. But I have a really good friend of mine who's Indian, and typical second generation, and no disrespect to anybody, but typical second generation Asian. He told me a few months ago, he said, "Oh, my daughter wants to be a lawyer." And I said, "Yippee, the Indian dream." And he's programmed her for 10 years for this. It's not some miracle she suddenly decided it. But I said, you do realize you've just lined her up to sell hours for money. and that's all that people do. And that's what we all do. And you know that as a doctor. The only way, ultimately, you're selling hours for money. And the only way you can earn any more, you haven't got the luxury with COVID that you can sit at home and do something online. You've got to physically be there. And then the other thing, when you think about AI, the amount of jobs that are going to disappear. And it's not like last time there was a kind of industrial revolution or a mini revolution with the internet. This time, there's skilled people. I have a new kid that he's in his mid-20s. I was teaching privately last year, and he came to me. He's just finished studying 5 years to be an accountant. And I said, well, that might have been a bad choice. He said, no. And he said, half the people that were working in this accountancy firm when he started articles, he said they've gone because everybody's using apps now. And basically, he said, my job is just to sign stuff off. So, and I mean, it's going to lead to all sorts of problems as well, socially, because there's going to be so many people without work. I mean, I saw a clip on YouTube yesterday. There was a truck in China overtook this guy in a car, and it literally had no cab on it. It was just fully automated. And then the taxi drivers are going to go, and the train drivers are going to go. A lawyer, I have a client who's a lawyer. He said, we don't need half the staff anymore. We might send somebody to the library years ago and spend 3 days looking for case law. We just push a button or ask ChatGPT now. So I think that you need to think differently. And I mean, the other thing is we've all been programmed, just put money in the S&P. You put money away until you're, well, they used to say 60. Now it'll be 70, 75, 80. And by then, hopefully, you'll have enough, hopefully being the word, you'll have enough to retire. Well, I think that's terrible advice. You know, you look at the stock market now, the dividends are appalling. And so if you've got $1 million, you're looking at 3.5% for a dividend. It's atrocious. So I think you've got, well, you've got to think differently and laterally and not listen to all the BS, you know, and all. We just had it. I think, is it Goldman Sachs have just had the best trading period for years and years and years in the chaos we've just had, when lots of people have lost a lot of money because it's a rigged game. They know how to play the game, and your average guy, girl doesn't know. So, you know, you've got to think differently, and you've got to be more independent, and you need to be better educated. Because I left school, I didn't even know how to write a check when I left school. I did economics at advanced high school level. I didn't know how to write a check. And now you're getting kids coming out of university. I've got a young lad that I trained a few years ago, works for us now, or works with us, and he's got a degree, a very smart kid, and he was interested in buying property for rental, for income. So I said, right, well, I'll give you some rough outline, but you go away and study and then come back and tell me the areas and the potential income and what it's going to cost and everything. And when it came to the subject of mortgages, I said, how much, what mortgage can you get then? Oh, well, they tell me I can get such and such. Who told you? The realtor told me. What do you mean the realtor told you? And the way that they do it is to basically say, in the UK, what they're doing now, before they let you go look at property, we need to know if you can afford it, which makes sense. But they're actually making more money from the commission from the mortgage than they are from selling the property. So then I said to this lad, bright lad with a degree, what's the APR? I don't know. What do you mean you don't know? So I spent 5 minutes Googling with him, and we got it down to about £120 a month less, and a better deal and a better rate and all the rest of it. But he'd no idea. So I remember reading Kiyosaki, Rich Dad Poor Dad, years ago, and it was all about this lack of financial education. And it strikes me that there's still a lot of it. You know, you have adverts in the UK, and it comes up on the bottom in big letters saying APR 30%. What? Who in the right mind is going to take a credit card with 30%? But they don't understand what it means, in my experience. You may be different in the States now. I don't know.
Yeah, there's so much to unpack there. You know, like, you know, we were you know, anytime you know, like we were just talking, like resumes are obsolete, and you know, this you know, kind of so the question I have for you is, because you're like in this period where everything is good. You're like you're you know, you're financially stable, and you can, you know, your kids going to private schools, you know, you have a good quality of life. And you know, a lot of I talk to a lot of my friends and colleagues who are in similar positions, and they're like bitter about the past. They're like, yeah, if I didn't make this mistake, or if I didn't get divorced, or you know, if this lawsuit didn't happen, and they're bitter about that. But they're like, yeah, my net worth could be 10 times more or 100 times more. How do you deal with this?
I think life's too short, ultimately. I mean, at the end of the day, I got a backhanded compliment today from the young lad I was talking about earlier. He said, you're amazing, you. I said, why? He said, because you're learning to do options now. I mean, at your age, you're doing all this new stuff. Okay. But I want to be intellectually stimulated. And it's another thing about people wanting to quit. I have quite a few friends here that retired. They're from the UK, and they just play golf every day and then go drinking. Well, that's okay. If you're mad on golf and mad on drinking, it's great. But for most people, you surely need some kind of intellectual stimulation. And therefore, if you've got any interest in finance, then study it a bit more. But don't just fall for, you know, if such and such a bank says, oh, we're doing this at the moment, well, think, oh, hang on a minute. They're probably doing that because they want to buy your stuff by frightening the pants off you. So you have to understand that the way that the financial world works, and it's all interrelated as well. You know, I look on the morning, I look at the DAX, I look at the 10-year note, the 2-year note, I look at the currencies, I look at stocks, I look at crypto, because I'm trying to work out where the big money's going. And then I'm just like a fly on an elephant's bum. I just want to go where the elephant goes. So not complicated.
Yeah. And I think the most dynamic, I love, it's the most, like, there's always something new, something different, something to learn. Just like the markets are, after 2008, it's just really been a very interesting, especially after COVID too. Like the markets are just very interesting. Like,
well, again, they're scary. I mean, the thing is, this thing again about just put your money in the S&P and retire when you're 65. Well, if you'd come up to retire in the middle of 2007 and you have $1 million in your bank account, which 20 years ago, $1 million wasn't bad, suddenly your $1 million is worth $500,000 and you're not going to be retiring. And it took the S&P 5 years to recover. And believe me, anybody that suffered the pain of it going down was not in a rush to get back in. But gold only came down half as much, recovered within a year, and then went on a parabolic run. Mm-hmm. And so it's this thing about the cycles. So we had the same thing in 2018, a mini crash with the stock market, same with COVID. It came down, but it went back up. But then the S&P took over in 2012, and gold was terrible. So again, just trying to catch the cycles. I mean, you caught the best cycle catching Bitcoin. What was it, 2010?
2012.
2012. Yeah. You did keep some of it, didn't you?
Yeah.
I have an Aussie client. He's a banker, and he owned 100 Bitcoin in 2015, and he sold them all. But having said that, he tripled his money at the time, so he thought it was a good deal, which at the time seemed a good deal. But now, dear me. So yeah. I usually say to people with stuff like this is just keep a bit of anything that you buy. So when crypto crashed in 21, we'd been taking profits all the way up and taking the stake out, and then got back in again last year. And then the back end of last year, at 23, I started getting back into crypto because it was livening up again. Bitcoin consolidated below 30. And I started to say to people, look, this is a consolidation phase. I think it's going to go again. And it did. And it went nuts. And then the back end of the year, when Trump got in, we bought Cardano again. We bought XRP, HBAR we bought. It went up 500% in 3 weeks. Yeah. So again, if you're in at the right time, it's easy. But having learned with the dot-com boom, take the stake out, take some profit out, because it's not going to stay up there all the time. So
yeah. Yeah. And what do you say about, like, because again, a lot of my colleagues, they're like, this bank is 5% interest, and or like these CDs like 5%, 4%, or the S&P 8%, and then I'm just like I just chuckle inside, because like it's a different paradigm for them.
Yes.
Where it's like, if you don't know what you're doing, yeah, maybe, but if you can, again, 8% is going to be nothing. It can't even keep up with like taxes, inflation, etc.
No.
So, I mean, but
even, 8% is good compared to a lot of them. The aristocrat stocks, most of them are paying less than 3%. I think Johnson & Johnson, I saw the other day, is paying 2.2. So then all that happens is, if you do retire, is you just end up eating into your capital. And as I had when I was 40, suddenly you start eating into the capital and it starts going very quickly. Yeah. So again, you've got to think out of the box. I say at the moment, my portfolio is fine because I started buying gold in 2022 when it was at 1,800. It's doubled almost, and silver's done the same. But I was buying mining stocks 2 weeks ago that are up 20%. So one of the things, if you understand a bit about the gold and silver go on a run and the miners tend to lag. But what it means is that the metal in the ground is actually at a discount at the moment. Yeah. So there are still some opportunities there. But again, if you can catch this right cycle. So for me, I use Forex for years to generate income and then put the income into assets. Property, I don't know now. In the UK, we've sold nearly all ours in the UK. The previous government were anti-landlord. The current mob are just mad. So we just don't want to have money tied up there anymore. And it's going to very soon be in a state, if people don't pay, that you just won't be able to kick them out. So the golden days of property in the UK have gone. But if you can buy property, and make an income from it, because again, it's the thing of using other people's money for leverage rather than having to put all your own in. And when we bought property, we were going to buy 3 for 100,000, and a good friend of mine who came from a similar background from me, both fathers worked in factories, no idea about money. And he said to me, "We'll mortgage them." And it was, well, don't really want. And then the real shock was, do them interest only. And so we went from 3 houses were going to give us £1,000 income to 10 houses that gave us £3,500 income and 10 lots of capital growth. And what he said to me was, in the UK, on average, property would double every 8 years. So if you're really bothered about the mortgages, just sell 3 or 4 and pay the mortgages off, and you're still getting £3,500 coming in. So that was like a light bulb, and that was pre my reading Kiyosaki, The Rich Dad Poor Dad, and the other things. But it's that kind of mindset that you have to think. And I think probably, I'm guesstimating, but your colleagues, if they've gone through formal education and a formal working life, and they've probably got a financial advisor, and that's the game that they are used to playing. And, Warren Buffett is king and this is great. I think it's all changing. And I say, I'm dabbling at the moment. I never talk about anything unless I'm willing to put money where my mouth is. So I've put $10,000. I've spent about 8 so far into something called high yield ETF. And first month, it paid me 3.5%.
Oh.
If I put the money in the S&P, I might get that in the whole year. So on the basis at the minute that I've bought them cheap anyway, because they're down, because the stock market's down, so they're down, I could be 43% income on 100K. Somebody with $1 million on 4 or 5% is going to get the same amount of money. So again, even if it's not about retirement thing, if it's a thing for a younger person wanting freedom earlier, explore different possibilities, but don't be reckless.
Yeah. What are your so I have a couple of like sort of industry questions. And so the first thing is, what do you think about the Trump tariff trade? Obviously he's like, it's caused chaos in the markets. And so what are your thoughts on this, where everything is going to go, or how it will play out?
Well, the bond market stopped him the other day, and the bond market finished Liz Truss off as the Prime Minister of the UK. She was the shortest Prime Minister on record with 44 days. And it was the bond market that broke her. And the same with Trump the other day, is why he's backed off. Because if that comes down, then everything literally comes down. And then the financial world is worse than 2008. I understand what he's doing on the one hand. There is some method to the madness, I believe. And if you look back at Trump's interviews over the last 30 years, he's consistently gone on about China. And I think it's Lutnick, his financial guy, came out the other day and said, look, the elephant in the room is they've been stealing our technology for 30, 40 years. Nobody's ever stopped them. And then they sell it back to us cheap. So that's the psychology that they've got. A Chinese guy I listened to the other day on TikTok, though, threw it back the other way and said, well, hang on a minute. We are creating a product that they may be buying, Walmart buy for $50. We've made $1 out of it and they make 50. So it's more complicated than it seems. My thinking is if you read The Art of the Deal, which allegedly he had nothing to do with, but The Art of the Deal, the bullishness, the idea of a deal normally is that we make a deal and both of us are happy. Well, he doesn't care. He just steamrollers in and throws a hand grenade in the room and then sees what happens. And that's what he's done. And it's rattled them. It's rattled the EU. It's rattled the Brits and the Vietnamese, and China at the moment standing back up to them. But it can't go on for long. And the other thing about it, nothing's been said since, but there are a lot of Republican politicians now getting twitchy because there's re-elections next year. And at the end of the day, a politician's prime concern is to get re-elected. So even when you've got like Ted Cruz coming out and saying, hang on a minute, this is going too far, he can't, although he personally doesn't give a monkeys because he can't, he's not going to be re-elected. The Republican Party can't allow this to go on too long. But when Doge first started, I have a prediction. This is my prediction guesstimate. when Doge first started, Elon Musk said something about, and I only heard him say it once, but he said, all this money that we're saving, we would be able to give every taxpayer $5,000 as a bonus. And I kind of think that if you're creating pain to the American public and you're creating pain to manufacturers and all the rest, and also to your own party, if he suddenly pulls a rabbit out of the hat and says, look, okay, we had to do this, all these deals are going to get done, but there's 5,000 for each of you. Woohoo! The one thing with elections, you know, at the end of the day, they did it in Australia years ago. The Green Party were going to get in because everybody's concerned about the environment. And then the last minute, everybody voted for the right-wing party because they had lower taxes. So I think that if he pulls the rabbit out of the hat of the tax rebate, then everybody will be fine. And there will be some kind of normality, because otherwise it doesn't make sense. What's your take on it?
Well, I actually, so the, I mean, what I think is, you know, also with the bond market, because he was targeting, basically Jerome Powell won't flinch, and so he's got to get the 10-year down. And so the only way he can get the 10-year down is to crash the market to get the liquidity into the 10-year to drive the yield down. But then what I was talking with my wife the other night is the second like Japan and China started dumping the treasuries and spiking the yields up, he had to stop, because it was just like he's gonna cause a crash. You know, oil was crashing too. So ultimately, it's like it'll settle down, but just everybody is rattled and scared, and you know, obviously like Nvidia and Nvidia in China and this AI is all yeah.
But again, I can understand it, because I saw a picture the other day of BYD, which is a Chinese electric car company. And this factory compound is bigger than San Francisco. It's massive. And they've got everything on site, and all the constituent parts and materials are on site. Unlike Tesla, which are importing cobalt from South Africa and batteries from here, there, and everywhere. So I do understand what he's talking about. But another interesting way I was thinking the other day, if crypto becomes more mainstream, which it is going that way, I mean, his attitude has flipped completely. But there's talk at the moment, I think there's supposed to be bipartisan agreement about a stable coin for the US. If a stable coin, if more people go into crypto, then they will need to use the stable coin. The stable coin companies have to buy treasuries.
Interesting.
So maybe, because I think the Chinese had already stopped buying government debt from the Americans. I mean, let's face it, at the end of the day, USA PLC is bankrupt. Who in the right mind would lend any money to a company? The only reason why they carry on as they are is because they've got the printing press in the basement and we just print a bit more. But ultimately, if it was a business, it would be bankrupt. So, but that was a thought I had the other day with the stable coins. But I say China was already supposedly not buying as many, and which would make sense. So we'll see. But ultimately, I say it can't carry on as it is. So one way or the other, it has to be resolved.
The next question I have for you is, you know, back then, I think before this whole Doge thing and like pre-COVID, you know, the whole rage was like, I'm just curious your thoughts on like, you know, Tesla and like Ethereum. You know, Ethereum, everybody was like, yeah, it's going to be the internet, you know, the decentralized internet. It's going to be the app store. I mean, you look at Ethereum now, Ethereum hasn't done anything.
No.
So what are your thoughts on Tesla and Ethereum?
Well, it's like with Tesla. I mean, obviously, Musk's taken his eye off the ball. Then you've got large amounts of people politically don't like him, hate him, so they're not going to buy a Tesla. And sales, anecdotally, I knew in Europe were way down before the first quarter results came out. And apparently there was a survey in Germany the other week, 90% of Germans will not buy a Tesla. So he needs to come out with something. So the other day he came out and he started talking about robots again and robot taxis. But they're still way behind China, because China, I think in Wuhan's got 400 running around. So America is behind in that respect. And also the regulatory process is more time consuming in America. In Europe, it'll take forever. It'll take 10 years because they just overregulate everything. So Musk needs to come out with something either that they've got robot taxis or the robot cars. Because the thing is, they've also got the batteries, they've got all the other things that they do in the background. But ultimately, they need to do something. And just like I said with Trump, maybe suddenly says, oh, look, there's a tax rebate for everybody. That would suddenly improve the dollar. It would improve the stock market. It would improve crypto because suddenly people have got a bit of money in the pocket and off we go again. So Tesla, I personally am not buying Tesla at the moment. I haven't bought in at all in the last year or two. And I mean, in the first few years, Tesla didn't make any money making cars. They made money from carbon credits, which they then sold to Fiat and made $2 billion, which paid to build a factory in Germany for which they were getting carbon credits again. So, I mean, the world's gone mad. But
yeah.
So yeah, something needs to happen, and I think Musk needs to be seen to take the reins again. But they have to come up with something. I mean, somebody said to me the other week, they're not really a car company anyway. They're a data company, they're a computer company, but they have to start to diversify and start to bring income in and confidence back in. And with the damage politically that's going on for Musk, as you know, in America, I mean, there doesn't appear to be the ability to have a discussion with anybody anymore. You're either one side or the other. And so the side that's anti-Musk, I can't see them ever coming around to him again.
Huh. Interesting. And what about Ethereum? You think it's like, you think Solana or something else is gonna supplant it? It's like,
again, Ethereum needs to do something. And what used to happen with but I can never pronounce his surname, anyway, Vitalik. The thing is, they used to have something coming up every 6 months. There was a new upgrade, there was a new fork, or there was a new this or a new that. And they haven't really come up with anything mind-blowing for ages.
Yeah.
And Solana, there's been so many Ethereum killers coming out over the years. I am in Solana. Solana is now my third biggest holding. But I mean, Bitcoin is way out above everything else. I only have about 10, 15% at most of Ethereum at the minute, whereas I used to have 30% and less Bitcoin.
Yeah.
But you never know if they come up with something, with DeFi and all the other things that it's got going for it. If they come up with something with some clarity and some clear direction and a thing, it could just set off again. And if it sets off again, then 5,000 is where it was last time, just below. And it could go back to being the silver to Bitcoin's gold. Solana's gone a bit quiet at the minute. But I mean, the main thing for me is I treat crypto the same way as stocks, in that I didn't buy any NFTs because I just thought they were silly. Yeah. And somebody paid $1 million for the first tweet. Well, what the heck? And I think at the end couldn't give it away. And a lot of these meme coins, I missed them because I just think they're silly, so I haven't really bothered. Although my wife's quite keen on some of that. So we do have some Doge and a few others. But in general, everything I bought had to be faster, smarter, cheaper, revolutionizing a sector and being used. Yeah. And I also had it split in a portfolio style similar to stocks, that I had some that were to do with privacy, some were to do with DeFi, etc. So I had it at one point in 2021. I had a hedge fund guy rang me up and he said, I understand you're not trading Forex for clients anymore. Would you be interested in sending them to us and we'll give you a commission out of it? And I said, well, what did you do last year? Well, they made a few percent. Okay. And how's it going this year? Well, the client will get 3 or 4%. Oh, great. And I showed him my crypto portfolio. And in February 2021, I think we were up 5,500%.
Wow.
And the guy's eyes went like off a cartoon character. And he was like, what the hell are you doing? I said, well, I'm not sending anybody to you.
Yeah.
Anyway, he paid me in the end to teach him.
Wow.
So, yeah, I made, and my clients made more money in 9 months in crypto than you would have made in the S&P for 30 years, probably 40 years.
Yeah.
So again, the right time at the right place at the right time. With all the rest of it that's going on at the minute, Nvidia, I thought Nvidia was overhyped. I did buy some recently. One of the things with Nvidia and Amazon and Meta and Microsoft, I was reading a lot lately. It's not just AI that they're heavily involved in. They're also heavily involved in quantum computing. So I think with it, but I don't think it will be like normal. Normally, I only buy a stock if I think it can make 25% in a fairly short space of time. And I will only buy crypto if I think it can make 35% in a short space of time.
Yeah.
But I think that in the next 18 months or so, apparently the development in quantum computing is going nuts, and that would be mind blowing as well. And I mean, last year my best stock was MicroStrategy, and if you're familiar with MicroStrategy, it's a Bitcoin related stock, but that went up 1,400% last year.
Yeah.
And you could have done that, I believe, within an IRA or within a tax wrapper in the US. So even though at the time there was no ETF, people could get access to Bitcoin through MicroStrategy.
Yeah.
So again, just what I kind of say to people is just join the dots. You know, if this is happening there, that's going to impact that. And I mean, the tariffs are the classic. Well, Nvidia, China, problem. That's not good. They've just said $5 billion down next quarter. But when the rally comes, when there's a solution, then it'll probably go nuts again.
Yeah.
So it's the old Buffett thing of, you know, when there's blood on the street. And I mean, the other thing I was saying to people the back end of last year, Warren Buffett sat on 350 billion in cash. Why? It's not rocket science, you know?
Yeah.
Whereas the guy in the street is the one buying gold at the top now because it's on the news and everybody's talking about it. But the time to really buy was 18 months ago.
Interesting. What do you think we are in the AI cycle as in comparison to the .com? Like, you know, obviously there's going to be like a hype, and then there's going to be a bust, and then there's consolidation. And then how do you see that?
I've read a few reports last year, and they basically said to the amount of money that had been pumped into it, there was no ROI coming in. But I think that the quantum computing actually will make an impact. And you also look at some other companies. I look at Amazon, and I think with what Amazon are doing and diversifying in so many directions, and I think there's a factory in Italy that went from employing hundreds and hundreds of people to there's like 5 robots run it. They're delivering using drones in Texas, I believe. They're talking about doing it in other areas. So again, there'll be more jobs go. But again, it's cost effective for Amazon. So I think Amazon will always do okay. I've never bothered buying it before until the other day, but it came down enough. It could make 25% if I bought it. But so to me, I think the quantum computing is worth investigating for people, just to say, well, okay, we spent all this money. I think, was it Apple wrote off 11 billion on electric cars that they spent on electric cars that didn't work. Yeah. AI, they've all spent a lot of money, but the quantum computing could change everything. AI could change everything. I listened to a podcast the other day, a guy far smarter than me was talking about how ultimately we could have the end of the internet where bots are talking to each other. I think it might have been one of your podcasts. It was a guy that he was something to do with social media and the bots, the way they work. I thought it was one of yours. But they're basically saying that now we're getting to the point that most of the things going on in social media are bots. So with AI, eventually, there's a theory that we'll have the end of the internet because it'll just be bots talking to each other.
I know, because I know A16Z, Mark Andreessen, they got one bot to send one Bitcoin to one, like they were talking, then they were just playing around with it, and it was, you know, but that's, you know, really fascinating. So, you know, how can people find out more about you and connect with you and learn more from you and find out more about you?
Okay. I'm on Twitter, which is Marc Walton, MARC Walton, or Forex Mentor Pro is my main website.
Yeah.
And forexmentorpro.com. And if anybody would like a chat, my wife's in England next week, so I have a bit of time. If they go onto the website, they should be able to find a link to my diary. So if anybody wants a bit of guidance, I'm happy to do it. And we have a live training session every week as well, so they can come along to that if anybody wanted to come along. Other than that, we've got social media, we've got blogs and things. So have a look around. But the main message for me is think laterally, think different to the herd, and think about ways to make money without needing loads of staff and be able to do it online and from the comfort of your home, and not be selling hours for money.
Yeah, excellent. Really, I really enjoyed talking with you, and advanced trader, and about and then thanks so much for coming on, and keep up the great work.
Yep, pleasure to be here. Keep spreading the word and getting people to where they want to be, which is what we're all trying to do. Great to meet you. Catch you later. Bye-bye.